Hello everyone and welcome to my daily report market analysis videos with me, Richard Penn, market analyst at Hantec on Monday the 30th of March. Well, the positive market sentiment that we had through markets following on from the coordinated or central bank and fiscal support that governments and countries were engaging has just started to dissipate somewhat, and markets are focusing back on the spread of coronavirus and the quite concerning numbers that we're getting in terms of cases and subsequently also deaths as well. So there's a big worry that we're going to see these exceptional social circumstances, as in quarantining, self-isolation measures. They're going to be pushed further into the future, and subsequently that's going to be seen as hamstringing economies and economic growth for some time to come, and that's really playing on sentiment today. And we've seen that sort of regaining negative outlook on Friday, where the S&P 500 just fell back slightly, and we've got futures slightly lower again today, or actually no, slightly higher. But equities generally in Europe had been under pressure through this morning. Still volatility a lot playing out. We've also seen the dollar starting to regain some strength again. We've show you volatility on equities remains massively extended levels at 65, but the dollar starting to pick up again, and that's not a great sign because the dollar is playing as a safe haven at the moment, and even, well, actually trading against the yen, dollar's lower, but against everything else, the dollar is performing very strongly again. So that doesn't bode especially well, I don't think. We've got treasury yields which are now starting to fall away in the last day or so. Friday, big down day on equities. We saw treasury yields falling again lower today. That doesn't, again, look good for equity markets. And as such, we're seeing markets lower, although futures on S&P are a bit mixed at the moment, shall we say. So let me show you another chart, which is a rather concerning little number. Oil, WTI has not quite yet broken down below 1945, but Brent has decisively now broken below its low from mid-March, and continues to fall away, and that is a real concern. Big signal for growth concerns there. Now, in terms of data points today, well, we're sort of looking at rather lower tier data today. We've got German inflation numbers, which come out the day before the Eurozone data, and that's expected for the country at 1 o'clock. Please note also that the European times and US times are now back in sync. So we had the clock change over the weekend in Europe. So HICP on German inflation expected to fall back to 1.4% from 1.7 last month. Pending home sales in the States falling 1% on the month. That doesn't look good. But that's for February, so you're likely to see, as I've been talking about, the US data is really going to show through in March. Okay, so let's have a look at my chart of the day, which is the Kiwi dollar. Now, what we have seen is the Kiwi, which has rallied over the course of the past week. Now, this rally has formed a run of really good, positive candles for the Kiwi. Strong gains on the day. In a run of six sessions in a row, and you can see the momentum indicators are really benefiting from that. But it's interesting that RSI 45 now rolling over. 21-day moving average, the green line, hitting that this morning. So we've just tailed off a bit today. Now this is the first real test of this uptrend. Although what you say on the hourly chart is this is still a pretty strong uptrend. So how the market responds to this first test will be very interesting, because we see a run of breakouts becoming supportive. So the latest one, 60 big figure, look at that, pivot line, 60 big figure. Resistance has become supportive today. But the big one that I'm looking at, the main one, is this breakout above 59.10. It's resistance that we've seen a couple of times in the last 2 weeks, breaking out on Thursday actually, and then retreated on a pullback to find support pretty much to the pip and rebounded and went again. So this uptrend is strong, and you look at how the moving averages are developing on this hourly chart. I've got the 55-hour, but also look at the 89-hour. Having been a basis of resistance on the way down, a pretty good basis of resistance, is now turned up and has become a basis of support, and that comes in around that 59.10 mark, just a shade above that now this morning. You've got the uptrend in place. So as I said, how the market responds initially around 60 big figure will be interesting. That is holding this morning, which is a positive. But ultimately 59.10, that is the first key higher low of the recovery, and if that is broken to the downside, then that is pretty much recovery sort of being very much questioned. But for now, we're still in this recovery uptrend. We've had a dip back this morning, but the bulls are still in control. But the question marks being on the daily chart, whether these resistance areas, the 21-day moving average, are an issue. You've got the Fibonacci levels, yeah, you'd be looking at that, and through 38.2%, that pretty much does open 50% fib, 61.10. So that would be a next real target. But as I said, with the momentum indicators just sort of beginning to threaten to tail off around that neutral point, this is a really key moment, I think, for the Kiwi dollar. Okay, so with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinar.